Hello, everybody. It's that time of maybe the year, the quarter, I don't know. But there's some big news that could have a big impact on Bitcoin. And I'm going to approach it by crunching numbers. And we'll also talk about the other crunch, the supply crunch. Is it even possible? Because I saw some chatter out there about maybe it is. But today's story is called the retirement tsunami because, and again, it's US retirement accounts only, but remember they're worth $12.5 trillion. What would happen if a tiny slither of that made it into Bitcoin? That's the work today. Thank you to the mods in the chat and everybody for being here. Let's get into the story because this is a fun one. I believe, at least I enjoy these ones. Disclaimer, not financial advice, and thank you to everybody on Patreon. This is from, let me zoom in to read it, Graham L. Smith. I watch everything every day, subscribe to the full suite of tools, Patreon members for many years now. Thank you so much, Graham. Appreciate you, and I hope you're well on the path to financial freedom. That's the whole goal. Let's get into the news. First of all, Bitcoin has recovered. We did fall to that 114,000, not once but twice. And people are quite rattled. But August so far is up 3.2%. Not bad, considering the average return for August is minus 0.4%. But again, we have to look at the yellow years, 2013, 2017, 2021. They are the analogs for this year. And if you look at those returns in August, 32.8%, 64.2%, and 13.4%. So the average of those is quite high indeed. So August, not so bad. And it's been mixed in stocks, but mixed in altcoins, but Bitcoin's doing quite well. Let's try to get to why Bitcoin is doing well. Well, this happened. This is the big news that's happening today. And it looks like executive orders are the way to run government these days. Anyway, I'm not going to go there. I'm just going to focus on what is important. And that is that the US president is set to sign an executive order permitting alternative assets, including cryptocurrencies like Bitcoin, into 401k retirement plans. Remember, the US doesn't have pension schemes like other countries do. You are on your own. You have to blaze your own trail. And if you don't, you're pretty much screwed. And that's why I have this whole thing, the 401k. I've made videos about that as well. But the point is, there is a truckload of money in there, $12.5 trillion. And the question I always ask myself is, what happens if a tiny piece goes in? And how much should you allocate? And shout out to this is from the Bitcoin Breakdown. They had a cool survey because everybody's talking about, what's the impact of this retirement account allocation to Bitcoin? What is the ideal Bitcoin exposure for a pension fund, retirement account, everybody? Now, if you ask BlackRock, they think 2 to 5%. If you ask other fund managers, they're now saying 5%. And some are even going as high as 25%. Because remember, 60 to 80% of the S&P 500 is a zombie. So either you're in the Mag 7 or you're in Bitcoin or you're toast. You pick. That's my interpretation of this. But let's look at the survey. 0% exposure, 7.4%. Believe nobody should have any exposure to Bitcoin. 5% believe 5% exposure, 20.4%. 10% exposure, 53.7%. That's very high. And 100%, of course, it's a Bitcoin audience probably. 100% Bitcoin, 18.5% say that. So the result, the winner is, of course, the 10% allocation. Or if you take 5% to 10%, that makes up 75%. Call it nearly 80%, which is pretty impressive. So that is kind of the recommended allocation from Bitcoin audiences. But let's take my math and run some numbers. I'm going to walk you through this. You've seen my allocation amplifier many times, but this one has a little bit of a twist because the numbers are so substantial. So thank you, Sylvain. Grüezi wohl. In Switzerland, appreciate you. And GQ Trader, TND Tesla, Sean D, and who am I missing? Forrest is there too. And Andy, the Australians are up. Woo-hoo. They're up early. Early bird catches the worm, as they say. Anyway, this is the impact of U.S. retirement accounts allocating between 1% and 5% of Bitcoin. And I do want to zoom out for a second because what is important here, everybody, U.S. only makes up 4% of the population, about 25% of the global net worth. So, but this does, imagine just all the Australian retirement accounts, the British ones, the European ones, the Brazilian ones, the Asian ones, especially the Japanese, the South Koreans, the Chinese. They're voracious savers. Imagine they start allocating to Bitcoin. Then things could really kick off. We're talking not $12.5 trillion. We're talking a lot more. But I'm just doing this for the US, okay? So if we take 12.5 trillion in retirement accounts, and those people, say in a year or 2 or 5, we're not sure when, allocate 1%, that would drive 125 billion into this asset class. And this is just Bitcoin, multiplied by my 21 multiplier, which is what I used back in 2020 and 2021. That would increase the price of Bitcoin. Just 1% allocation of just US 401ks, retirement accounts, would take the Bitcoin price to 290,000. Now, that's 151.72% return on investment from where we are today. If we allocate 2%, there's a little change here. I tweaked the formula. The multiplier becomes 31. We'll get to why that goes up in a minute in the later part when I talk about supply crunch. Okay, that would take the price to 633. If the allocation is 3%, again, BlackRock are nearly at 5% now, and the multiplier is 41, that would take the price over $1 million. And then 4% allocation. Remember, it's a very small asset. 51 would be the multiplier. The price would go to 1.81 million. Remember, if you were out there trying to buy $500 billion worth of Bitcoin, okay, that's the 3%, the 4% one. The price will go up, okay, because it's a very hard, very scarce asset. That's why I'm fascinated by it. Let's go even crazier. Let's go 5% allocation. Remember, 5% is nothing like this 10% here. Just 5% allocation of $12.5 trillion. That would take the price to $2.658 million, 2,200% return on investment from here. Now, a lot of people like Kathy Wood, etc., believe $1 million is very close to happening. Tom Lee believes $1 million is very close to happening, and many other people too. Maybe it could happen sooner than later. And this is just retirement accounts. Okay, this is not MicroStrategy. This is not the ETFs, etc. So it's pretty bonkers. I have a little visual of what this actually looks like, which is even more impressive. This is the price impact on Bitcoin-based percentage allocations. Again, 292K, 633K at 2%. 3% is 1.14 million. 4%, 1.8 million, and 5%, $2.658 million. Call it $2.66 million between friends. Is this possible over time? Yes, if the protocol exists and survives, but it's crazy. But I want to talk more about the crunch, okay? This is much more of interest to me. People say, oh, they're not happy with the Bitcoin price. I'm very happy with the Bitcoin price right now, actually. It's $116,560, up $1,500 today. But what's really crazy is the amount of stacking that's happening among very few players. I did a video last week of all the hundreds of players that are coming in and all the amount that they've allocated and the millions, the 1.4 million of Bitcoin that they will purchase. Where they're going to get it, I don't know, because we're going to talk now about scarcity and potential crunch. Not saying there's a supply crunch. I share numbers, okay? We know that an old wallet can pop up and dump 80,000 Bitcoin in a heartbeat, which is very much necessary in the market, okay? That's how markets are made, supply and demand, buying and selling. That's how price is determined. But let's look at this for a second. This is the amount year to date, how much Bitcoin's been bought. MicroStrategy bought 180,000 Bitcoin. The average monthly buy is 25,714. ETFs, 182,000. These are the Bitcoin ETFs around the world, mostly in the US. The total is 362,000 Bitcoin just in the first 7 months of this year, purchased by two cohorts. The supply, that is 450 mined a day, is 91,000. So there's a deficit of nearly 300,000 Bitcoin between these two players and how much is mined. And it ignores the rest of the planet completely. Okay? Massive, massive deficit. Where is this coming from? Yes, old wallets are selling. Yes, people are taking profit. Yes, we know all this. But what happens now when we fast forward to the end of the year? If the buying continues at this exact rate, you have the Bitcoin ETFs and MicroStrategy will buy another 258,000 when only 65,000 are mined, another deficit of 193,000. Add these two together, that deficit's nearly 500,000 Bitcoin. Again, two cohorts, MicroStrategy, Bitcoin ETFs. And there's a lot more than that actually buying out there. Let's have a quick look at who's buying all the, because I touch on MicroStrategy in great detail, but BlackRock here is doing about 56.3% of the buying, sometimes a lot more this year. So their market share is huge, but they now hold 723,000 Bitcoin. MicroStrategy holds 629,000 Bitcoin. Fidelity, nearly 200,000 Bitcoin. Grayscale, 181,000. And then the other players. All of these bags here total up to, I can't remember. Yeah, of course I can. But it's well north of whatever, 1.2 million. A lot of Bitcoin, okay? A lot of Bitcoin. So you add in the Michael Saylor and all the other treasuries, you're pretty much at 2 million Bitcoin now. And remember, there'll never be more than 15 million Bitcoin, which is crazy. But let's talk about what can be sold. Okay, we know the Satoshi wallet, 1.04 million Bitcoin, will never, hopefully, be sold. I don't think it will, unless it's quantum hacked in 8 or 10 years, but we'll get to that when the time comes. But here you can see that 25% of all Bitcoin has not moved in 7+ years. That's a quarter of what's out there. And some of this may never move because it's buried in a landfill, or it's sent to a wallet that doesn't exist, or keys burnt down in a fire, or fell off a boat, or heaven forbid somebody deceased, or whatever. The point is, a lot is lost, okay? But that's nearly a quarter of the supply, has not moved in over 7 years. If you go to 10 years plus, it's 3.5 million Bitcoin, okay? 10 years plus. What are the odds of that reawakening? It will happen on occasion, but not for all of that 3.5 million. I guarantee you, back in the early days, people mined it for fun, lost a computer, boom. Who here has ever had an old laptop that died and they tried to turn it on again and never went on again? Well, that's lost Bitcoin right there. And I have another interesting chart here. This from the top and bottom indicator, which is another remarkable thing. All of these things, I'm building a tapestry here so you can make your own decision. I'm not telling you there will be supply crunch. Okay, as the price goes up, people will take lifestyle chips. But will the amount of selling match the amount of buying? That is what we're trying to answer. And where the OTC desks get their bags from is the Bitcoin miners. And look at this. This green chart here shows you the Bitcoin miner reserves, okay? And as I covered, Saylor and the ETFs bought over 360,000 this year. That's triple what the OTC desks have currently. The OTC desks get their bags from the miners. The miners are hodling, and the miners have record low balance of Bitcoin. Okay? I hope all of this is clear so far. It's a very bullish setup, okay? If the miners had a ton of reserves, then I'd be worried because then they can dump them. So if you go back to where we were back in, say, 2019, they had a truckload of Bitcoin, okay? And they sold it all through the bull market all the way up through 2021 to late 2022. Then they started stacking again in 2022. But since then, it's been depletion, 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 depletion. And a lot of this is because of the voracious appetite of Michael Saylor, MicroStrategy, and the ETFs. That's it. You can almost see the transfer from miner reserves to OTC desks into their bags and positions. Very interesting. Let's look at the miners. What are they doing? Well, we have maybe somewhere between 40 and 60% of the mining is done by public miners around the world. But there are also nation states that are mining on the sly, and you don't know about them. You don't know how much they're mining, you don't know how much they're hodling, etc. So when I talk about 450 Bitcoin being mined a day, they are not hitting the market. They are not hitting the OTC desks. They're being stacked maybe in Korea, maybe in Bhutan, maybe in China, maybe in Russia, maybe across the Middle East, Latin America, El Salvador. That is what is important to be aware of. Now, if you just look at these ones from the HODL model, you can see these ones alone, just Mara, Hut, Riot, CleanSpark, DJT is in there. Shouldn't be in there. It's not a miner. although I think they're getting into mining. I'm not sure. Hive, BTBT, and Cypher, they all have over 110,000 Bitcoin. That's nearly 9 months worth of mining, $13 billion of value. And if you look at actually here, coincidentally, Marathon is selling at 1% discount to their Bitcoin bag. Their whole enterprise is worth nothing. And you can buy Bitcoin cheap by just buying the stock. It's kind of crazy. HUT, NAV premium is 1.7, Riot 1.89, etc. So whatever Marathon is doing, I'm not sure, but they do have a lot of IP. They have a lot of real estate. They have a lot of rigs. I'll get to rigs in a second too. Another crazy thing is happening there. And if things could not get better, what else is happening? Well, this is an overlay of global M2 money supply over the Tabby model. Miner reserves blown up. The Bitcoin price in blue and yellow is money supply. Money supply just kicked into its third rampage, okay? We had a bit of growth in January, and then it fell off a little bit to middle of May. And since then, I went on a straight rampage up. And now, and by the way, this is offset. So basically, all of this year has been going up, and Bitcoin will follow. Okay. And therefore, Bitcoin will go, according to this, to somewhere $160,000 range if history repeats and the correlation is like nothing else. Global money and Bitcoin are extremely closely correlated. Okay. Bullish yet? Let me know. Now, there is a little bit of bad news too for the miners and all this stuff. Miners have been hit by tariffs. The so-called reciprocal tariffs are crushing US Bitcoin miners, with import duties hitting between, I think, about 22% on Southeast Asian rigs and 57.6% on Chinese equipment. Remember, most of the ASIC miners come from China. Okay. And you think the Chinese aren't mining with all those rigs? Nah, you bet you they are. Now, the US has become one of the least competitive countries now for importing mining hardware. And this forces the Bitcoin miners to start looking at overseas expansion. While manufacturers scramble to build domestic production capacity, that may take a while. Meanwhile, who knows where this is going to go? But that is an issue. And we talk about mining and public miners and they're hodling, they're not selling. Well, either are these guys. This is Bhutan. They have been mining Bitcoin for a while. And Bhutan now, their Bitcoin bag is worth 40% of their GDP. Now, their GDP is not that high. It's about 3.42 billion, I think, projection for 2025, slightly less for last year. But that means they have about 14 or 15 billion dollars worth of a Bitcoin bag. Okay. That's crazy. If you look at the Bitcoin miners, what did I say? They have, I think they have about these guys here. Whoops. 13 billion. That's $13 billion worth of Bitcoin. These guys have 14 billion. Okay. These guys have more than those miners I just showed you, which is crazy. And this is great for the country. And it'll give other countries, other nations that have maybe hydroelectric power or lots of free energy, why don't they mine too? So approximately they hold about 12,000 Bitcoin, I think, is the amount. Anyway, and they do it all using hydroelectric power. And they've been mining since 2020. So that's a little bit of a case study for the rest of the world to look at. And if things couldn't even get better, holy shit. By the way, I've never heard of Sheet's restaurant, but apparently it's big. They have like 1,000 locations or 750 locations, I think, in the US. Looks like the US. And they are now offering a 50% off purchases when it's paid with Bitcoin between 3 p.m. and 7 p.m. So if you want half off your whatever food they serve, I have no idea. It could be big. But now Sheets wants to stack Bitcoin, selling whatever they're selling to get it, even taking half the value of fiat for the food, if it's even food. So that's the Bitcoin story today. Can we get to $1 million in time? Yes. Yes. If everybody, look at these numbers one more time. If this happens in earnest fast, okay, these allocations are just a tiny 1% of $12.5 trillion. That will take the price to 300,000. If it goes to double, it goes even higher because it becomes scarcer. And remember, a lot of it is not for sale. And remember, a lot of players are hodling too. So it's crazy. That takes us to the meme of the day. This is a good one. This is actually me. What did you do during the coronavirus, Dad? I bought more Bitcoin. And the little boy has some comments, which we will not repeat. But yes, C19 was a great time to stack. And those times you have to be ready for, everybody. A big part of investing is to be patient. Okay? When black swans hit, be ready with 5 to 7% cash and deploy hard. That's the key. Makes it so much easier. Bitcoin Only and Proxy playlist is up here after the video. I hope you all got smarter because of this, and I hope you enjoy the show. Thank you once again to the mods in the chat. And to Do Travels, Snickers Toasted, AR Ron, Sylvan Muster, GQ Trader, Andy, Forrest, Sean D, K8, TND Tesla, American Beijinger. The whole crew is here. My goodness. So honored to see everybody. Thank you all for coming. See you all tomorrow. And tomorrow's Friday Fire. I love that one. That's when I can be a little bit spicy. Good night, everybody. Bye.